What's up, guys? I'm excited to talk to you guys today because I get to really explain to you what's going on in my life now and what it's going to look like moving forward with the clarity that I finally really have. So when I retired in 2023, I was really trying to figure out what exactly is my next phase of life look like when it comes to business and investing. I already invested in over 50 syndications. I had over 35 properties that I've owned. I started private lending kind of on the side, and I saw that that was being really profitable. And I'm like, what direction do I want to go? What does my life look like now that I'm done with the game of football? And I started to develop a thesis when I really looked around. So I looked at my syndication investments, and while I'm still bullish on them that they will perform well, overall, I have a lot of exposure there. So there might be some that don't do as well, but overall, I'm expecting my portfolio of the syndications to perform well. But even with that, what I started to realize is these syndications don't pay back for 3 years, 5 years, 7 years, and many of them give little to no distributions. And even the ones that do give distributions, if things start to go wrong, they will suspend distributions. So the cash flow was very inconsistent. Okay, so then I pivot to my real estate and all the real estate I owned, and I bought good properties in the Midwest. I've owned stuff in Ohio, Kansas City, Tennessee, Tampa, and my portfolio has performed well, but I saw that the appreciation's gone up a ton, and when you look at return on equity, it wasn't very high. And now I'm like, okay, I've gotten a lot of my cash out of these deals, but now the return on equity isn't very high. What could I be doing better with my capital? Do I keep it because of the tax benefits? So I've just been going through this mental gymnastics. And then I started to look at my lending portfolio and the few loans that I've had outstanding to borrowers that I lent to. And the first thing I saw was this took the least amount of time, but the profit margins were phenomenal. And I wasn't even like putting much effort or time or energy into it. So that led me to down the thesis of, you know what? I think this lending thing can be a big piece for me. I have a strategic advantage because I've been underwriting deals, whether it's syndication deals or deals that I'm buying on my own for the last 12 years. So I'm like, I have an advantage there. I have an advantage because I played in the NFL and I have a decent amount of capital that I can deploy and lend money out. So a lot of people who get into lending, they have to immediately raise a ton of capital because they don't have any of their own. But I had a good capital base, and not only a good capital base, but I had assets that I can leverage, refinance, sell to where I can lend out even more. So I saw that as a strategic advantage for me. So that led me to be like, you know what? Maybe this is a business model that is parallel to real estate that I can really excel in. And I've seen it's already been profitable when I spend little to no time in it. So what if I focus on it and dive in? So for 2 years, that's what I did. I've been growing my lending company, and I've lent almost $15 million in the last 2 years of my own capital, a little bit of investor capital of people who've worked alongside me, but majority of my own capital. And now I can say with confidence what my plan is now and moving forward. And 42 Solutions is my main vehicle. It's kind of my moat that I'm going to be able to really grow and scale. But with that, I'm looking at my real estate portfolio and my investments in syndications, even some of the stuff I have in private equity, or even some of the stocks and bonds I have. And nothing is outperforming what I'm doing in my private lending company. And as I spend more time, I learn the business more. I see that I'm developing a stronger and stronger strategic advantage in my business. So what that leads me to say, by 2030, I plan to exit majority of the current portfolio I have today. So most of those 30 properties that I own still, I'm going to end up selling. Majority of the syndications that I get my capital back, I'm not reinvesting in syndications. I'm going to be pumping all of that money back into my lending business, allowing that to grow organically with personal capital and reinvested capital from cash flow, so I don't have to raise aggressively. I don't have to take out line of credits aggressively, so I can grow the business with my own personal capital and the capital from the business. That's kind of my plan. So some people might come to me and be like, I thought you were a real estate guy. Now you're just a lender. And it's not that I'm done with real estate, but I'm reallocating to the vehicle that generates the most income, that I have the most strategic advantage at, to scale up my income, which is then going to allow me to put myself in position to buy properties again. But now I'm going to be buying distressed properties that I can add value in, because as I'm lending on properties and on to borrowers, guess what I'm building? good deal flow from wholesalers, agents, contractors, great relationships of people who can renovate the properties, great investor relationships. So now I'm giving myself a strategic advantage when I do want to start to buy. I have a very asymmetric risk reward profile because I can lend to myself. My lending company can lend to my holding company to then buy it, then refinance into another loan. And now I can tap on the contractors that I know some of my other borrowers use to renovate the property. Now the wholesalers that send me some of their potential borrowers, they're the one bringing me a deal because they know I have capital to close. So I'm creating this loop in the Phoenix, Arizona market where I can dominate my niche in this space and really grow a business organically. Now, the downside of that is I'm not going to scale aggressively. I can go and try to raise 10 million, 20 million, $50 million, and I can scale my business faster that way. But then now I'm responding and responsible for all of this outsiders capital. I probably have a fund if I'm raising that much money. So it's not that I'm not going to bring on any outside capital, but that's not my main intentions or strategy. My main strategy is to invest my own capital and reinvestment capital and leverage line of credits and leverage SBA loans, and then strategically find good partners who want to earn a good return on their money, cash on cash basis, who want to go along the journey with me. So that's kind of my vision. It's a big pivot for me because I was a guy who was screaming real estate, real estate, real estate. And it's not that I'm not screaming that anymore, but I found that the cash flow in real estate is not nearly as opportunistic as it is in business for me. And I can mitigate my risk because my business is still revolved around real estate, which I truly understand. That's kind of my strategy now, and that's how I'm moving forward. And over the next 5 years, I plan on having a completely different portfolio than I have today. And I'm slowly going to be selling off properties, exiting syndications, and pouring more and more money of more and more of my own capital into my lending company. So I'm curious what you guys think of this. Make sure you reach out, tap in, but I want to encourage you to not be afraid to pivot. I'm staying in a sphere of expertise, but I'm definitely pivoting my strategy to what I feel like gives me the best advantage to succeed. And it's kind of like taking a step back. So I'm going to be selling properties and getting out of syndications to take 100 steps forward, get a cash flow machine that's generating so much income that I'm then able to cherry pick some of the best opportunities and really take advantage of this Arizona market. That's my strategy. That's what I'm going to be doing. And I'm going to be documenting my journey as I go along this entire time on this YouTube channel and on my social media and on my newsletter. So please take the time, make sure you're following me on YouTube, Instagram, and make sure you subscribe to my newsletter, The Capital Edge, so you can kind of stay along the journey as I'm really building this out. Thank you guys.